How to invest your first $100 in 2026. If you've only got your first $100 to invest in 2026, this video is for you. Not the people already sitting on six figures in their portfolio. I'm talking to the person who's like, I've got $100. I'm tired of being broke. I want to start, but I don't want to screw this up. If that's you, stay right here. I'm going to show you exactly how I'd invest my first $100 in 2026, step by step, if I was starting over from zero. And no, we're not buying lottery tickets. We're building a system. Let's talk about it. Step one, the mindset shift. Before we even touch an app or type in a ticker symbol, we need to fix something. Because a lot of people treat their first $100 like a scratch-off ticket. They say, how do I flip this 100 into 10,000 fast? Wrong question. The real question is, how do I use this $100 to build a habit that will make me wealthy over the next 5, 10, 20 years? That's how investors think. Your first $100 is not supposed to change your life overnight. It's supposed to change your behavior forever. So in this video, I'm going to break it down into simple steps. What you do before you invest a dollar, where to actually put that first $100, how to turn that $100 into a repeatable system, a simple beginner portfolio you can build from. By the end, you'll know exactly what to do, and more importantly, what to ignore in 2026. Step two, before you invest. Let's be real for a second. If your lights are about to get cut off, if you're behind on rent, or if you've got crazy high interest debt, that first $100 might need to go towards survival. But let's assume your basic bills are paid and you've got this $100 that you can actually invest. Here's my rule. If you have high interest debt, like credit cards charging you 20%, you can split this first move. Put a chunk toward your debt and still put a chunk into your first investment just to build the muscle. Because if I tell you, don't invest anything until your life is perfect, you'll never start. So even if it's just $50 to debt, $50 to investing, that still counts. We're not trying to be perfect. We're trying to get in the game. Step three, where do I invest it? Where do I actually invest this first $100 in 2026? You've got two main lanes, a tax-advantaged account like a Roth IRA if you qualify, a regular brokerage account. If I was starting from scratch with $100, here's how I'd think. If I'm working a job and I know I'm going to keep investing consistently, I'm looking at a Roth IRA. That's long-term, retirement-focused, and your qualified withdrawals later in life can be tax-free. If I'm not sure about my income, or I might need the money sooner, I'd use a simple brokerage account. No special tax perks, but also no rules on when you can pull money out. Whichever lane you choose, the next step is the same. You download a reputable investing app or use a brokerage website. You create an account and you turn on two-factor authentication. This is not a game. Your future money lives here. Then you link your bank and you move that first $100 into the account. In that moment, you've already done more than most people will in 2026 because most people will talk, complain, and never start. Step four, what do I buy with $100? All right, the money's in the account. Now the dangerous question pops up, what stock should I buy? This is where a lot of beginners blow themselves up. They chase the hottest stock on social media, the most hyped meme coin, some friend's guaranteed play, and 6 months later, they're out of the market. If I'm investing my first $100 in 2026, I'm going simple and boring on purpose. Why? Because simple and boring works. With $100, I'm not buying 15 different things. I'm not day trading. I'm buying a piece of the market, not trying to outsmart it. That's where ETFs come in. An ETF, exchange traded fund, is basically a basket of investments you can buy with a single click. Instead of buying one company, you buy a slice of hundreds of them at once. So with my first $100, I'd look for a broad U.S. stock market ETF, something that owns large, well-known companies across sectors, low fees, a long track record. Here's why this is powerful. That one ETF might hold hundreds of companies, big tech, banks, healthcare, energy, consumer brands, all in one move. If one company has a bad year, it doesn't destroy you. You're not married to one CEO's bad decision. You're owning the system. Now, can you use your $100 to buy a little growth on top of that? Sure. You could do something like $80 into a broad market ETF, $20 into a more focused ETF like tech, dividends, or something you believe in long term. The exact split isn't the magic. The magic is that you're building a core and then adding flavor, not buying all flavor and no foundation. Step 5, from $100 to a habit. Now we're at the most important part of the entire video, because if you stop at this first $100, nothing really changes. You'll feel good for a day, you'll tell a friend, maybe screenshot it, and then life goes back to normal. The whole point of this first move is to wake up the investor in you. So here's how I'd turn that first $100 into a system. Step 1, pick a schedule, weekly, bi-weekly, or monthly, whatever matches your paycheck. Step 2, pick an amount you can actually stick with. Maybe it's another $25 a week. Maybe it's $50 a month. It's better to do $25 consistently than $200 once and disappear. Step 3, automate it. Most brokerages let you set up automatic transfers into the same ETF. Set it and forget the drama. Here's what happens when you do this. You stop trying to time the market, you start buying through ups and downs, and you give your future self something most people never give themselves: time in the market. You're not just someone who invested once. You're now an investor. Beat. That identity shift is worth more than the $100. Step 6, future you. I want you to do something with me for a second. Close your eyes unless you're driving and picture this. It's 5 years from now. You're scrolling through your investing app, but instead of seeing $0 invested or an empty account like past you, you see a real number, not $100 anymore. Maybe it's $3,000, maybe it's $7,000, maybe it's more. Is that going to make you instantly rich? No, but is it going to make you a completely different person than the one who was scared to start with $100? Step 7, let's put this all together into a simple blueprint you can screenshot. You open the account, you make the deposit, you buy the ETF, you turn on the automation, and then you let time and discipline do what luck never will. If this helped you, do me a favor, drop a comment. I'm starting with $100. Hit subscribe so you don't miss the next step, what to do when your account hits $1,000 and beyond, and share this with that one friend who keeps saying they're going to start next year. I'm the Red Suit Investor. I'll see you in the next video.